Hello investors and traders, and welcome to the weekly market report. I'm AJ Monty, and this is a daily candle chart of the Cboe Volatility Index, ticker symbol VIX. If you're following along each and every week, you'll know I leave my lines on the chart so you can see what we talked about last week and how that worked out for the forecast this week. These lines that I drew 2 weeks ago was a longer term forecast for the VIX, where I said back here we would most likely drop and then rally, with the end of that line being my target. And you can see that on Monday we absolutely blew through that target and then pulled back. And now what are we faced with? Well, we still have a support level down here that I think will be tested. And there's a couple of other signals that tell me that the VIX could drop just a little bit. And I'll show you that in a moment. But first, let me redraw that line to show you. I don't have to take the exact lows. I'm more or less taking the average of those lows, projecting out, and that's how I draw a flat line or horizontal support levels. You can see here, this is the stochastics oscillator. It's still moving lower, hence the reason why I think the VIX will move a little bit lower next week. But towards the end of the shortened week, I think you're going to see a little bit of a pop like that, because of what we are going to expect to happen on January 6th. January 6th is the key date for certifying the presidential election. There's a lot of political thoughts out there right now. I have my own views. I'm not going to mix them in here because I know we have a mixed audience, but I think that we should all be prepared for a jolt in the market, especially when we come into January, for a couple of reasons. You may have heard of the January effect or the Santa Claus rally. Well, this came about back in 1969 and it was mentioned in the Stock Traders Almanac. And it was then that the Santa Claus rally was defined as a seasonal phenomenon where the last trading days of the year, last 5 to be exact, and the first 2 trading days after New Year's Day, we generally see a rally. And out of the past 45 years, 34 of those seasons have resulted in a positive Santa Claus rally. Now, that, of course, doesn't guarantee that we're going to see the same thing. But what a lot of people don't know is that if we don't get this stretch of winning days, that could be a sign that we'll start to pull back and maybe even see lower prices into January, February, March. Then we have that other old saying, as January goes, so goes the year. So we have a lot going on towards the end of this year as we say goodbye to 2020 and all of its volatility. Looking forward to a much healthier and prosperous 2021. But keep in mind, we need to keep an eye on these charts. If the volatility index starts to rally, that could mean we'll start to see lower prices in the market, particularly in the SPY. The volatility index, for the most part, is inversely related to the S&P. And you can see that last week what I did is I really didn't draw any forecast lines. I just drew a straight line support level and I say keep an eye on that, because if we start breaking out below these lows here, which is also coinciding with this 20-period moving average, we could see lower prices. So again, I think because the volatility index is looking like it's going to pull back a little bit, I think Monday, Tuesday, and maybe into Wednesday, we'll see higher prices. And then from there on out, I'm going to do a 2-week forecast and say this is what we could expect. One of the main reasons is that you can see this steady drop in volume as the markets are just laying flat. And so any kind of stop loss orders that are being placed by investors and institutions are going to slowly start building up in these areas down here below support and below the moving average in particular. So if we get any kind of closing or successive days that close lower, then we could start triggering off those stops. So from a risk management standpoint, I would say it's a good idea to protect against a downside move and make sure you're protecting any of the profits that you've built into, especially this last quarter of the year. All right, so that's the spiders. If we look at IWM, which is the Russell 2000, more or less the small cap index, I pointed out a couple things. I said that this support level, which at the time was the 20-period moving average, I said that we would, again, trail our stops up with each new support level that we find. And I had this little hash mark here saying that's where you would place a stop, is below support, not on it, and certainly not above it. So what are we going to do? We're going to erase this line right here, and we're going to move that up. Okay, so it's going to, again, keep that right in line with the 20-period moving average. And I would also suggest, just like on your individual stocks, to move that stop up with the market as it goes higher. Because look here, we're still seeing higher highs. You see that? Let me zoom in just a little bit so you can see this. Price action is still going higher, but look, we have a negative divergence in the CCI. And even with a higher high today and a higher low, we still have a hinge to the downside on the CCI. Stochastics still hovering at the highs, but definitely overbought. But I do think that we're going to start seeing prices move lower. So be careful. Once prices start breaking out below that moving average and below that support level, we could see much more dramatic downturn in prices overall. Let's take a look at the diamonds. Ticker symbol DIA. It's obviously the Dow Jones Industrial Average ETF. I did the same exact thing. I moved this horizontal line, which was at the moving average. And look, we flirted with that a little bit, but closed above it. And today, we just touched today's low. As I record this on Christmas Eve, the 24th, you can see that we bounced right off of that. But what's happening to the CCI? Very interesting. So that we had a higher Dow close today, but the CCI is starting to close lower. So I'm going to leave this in place. Now I'm going to put this, like a contingency more or less. If we start closing below that moving average, I'll leave it out here in the future, we start closing below that moving average, then prices will most likely start to drop. We're seeing a very pronounced megaphone top. I point this out almost every single week. You can see broadening topping pattern right here. It's known as a megaphone. And we could see much lower prices down the road. And that's why I'm talking about, if we don't see a long winning streak in the Santa Claus rally here, we could actually start seeing the sell-off start to occur, especially with these negative divergences that we see in the CCI right down there. So that's what it looks like on the monthly chart for the diamonds. Now let's take a look at the Qs. Ticker symbol QQQ. This more or less tracks the tech sector. I did the same thing, didn't really put any forecast lines on this one. I just said, there's the trend line, and there it is. And I trailed the stop up right here. Right? And so now we have a move. This is a weekly chart now. We had that trend line. There's the weekly horizontal support level that I said we have to watch out for. And as I zoom into the daily chart, you'll see exactly how on Monday the low came very close to that 20-period moving average and then bounced. But look at that volume. Steady drop in volume on the way up is not bullish. That's actually negative because the buyers are running out of steam while the oscillators are just kind of floundering right here. So what am I going to do? I'm going to, again, as a risk management note, move that stop or move that support level up to that moving average. And if we start to see prices close below there, again, watch out below. I'd like to take this time right now to wish you and yours a very Merry Christmas. Like I said before, saying goodbye to 2020. Coming into 2021, I'm very optimistic. I think 2021 is going to be a phenomenal year. I would also encourage that you learn how to trade bearish strategies, either short selling or maybe learn how to trade options to make money on the downside. Because as an investor, your only choice is to buy and hold. And if prices drop, then you sell out either at losses or lower prices, and that's all you can do. But in the world of options and short selling, you can make money on the way down. And a lot of times you make that money faster because the markets are so charged with emotion, and on the way down, that's why prices drop so quickly. So again, Merry Christmas, and we'll talk to you next week. So long.